Okay, we are live. Let me know if you guys can hear me using a new microphone today because I had to use a new one. So let me know if it's good. Okay, it's good. Awesome. Hello, everybody. Welcome back to the Stock Market Open. Let me tweet this out live that we are indeed live and we are doing some stuff live. Let me also put this in my Discord so they know that I'm here. We have a couple things to go over. We have a really interesting Palantir partnership that's going to be fun and I think important to understand or at least look into. Along with the news on Apple. There's no news on Apple, but there's something interesting about their charts that I wanted to talk about and discuss a little bit more in depth. So we're going to talk about that. Yo, Namir. Thanks for posting on Discord. Gabe, you're there immediately. I love it. Thank you. Oh, Gabe, Gabe, I was in New York yesterday when I got your phone call. That's why I didn't answer it. I'm sorry about that. But yeah, I was in New York like the whole day. That's why I couldn't answer. But thank you for being here. Are we having a Discord weekly call tonight? So we are not having a Discord weekly call tonight, and that is because I am doing something tonight. I am doing something tonight that you guys probably are going to be very excited about. By the way, the AC is fixed, so I don't need the fan anymore. Should I still keep it in the back just because? Should keep it? Morning hi for me and Taylor. Thank you, Richard. Thank you for being here. We're going to open up Webull. I will share what I'm doing the entire day, which explains why we can't have the Discord call in a little bit. I'm going to wait for some more people to get in here. And then I'll explain what's going on. So stay tuned, Gabe, because you're probably going to either get mad at me or be impressed at me for what's going on. All right. Let's talk a little bit about some of the different things going on in the stock market. We have 7 minutes of the market open. Palantir 946 barely up in the pre-market. QQQ or TQQQ up at 37.44. S&P continuing to rally. Bed Bath & Beyond also continuing to rally. S&P at 427 pre-market. Bed Bath & Beyond, what do we have on that? We have it's down 20% pre-market. That was expected because it is a basically meme stock. There was a kid at the University of California that made $130 million on Bed Bath & Beyond. Increase the volume a little bit. Okay. Let me know if that's better. Morrow. A kid who made $130 million because he put $20 million. Now, how did a kid get $20 million to bet on Bed Bath & Beyond? I have no idea. But he put $20 million. Joel, thank you for being here. I appreciate you. He put $20 million in Bed Bath & Beyond at $5.50 a share. It sold at 27, so he made a lot of money at the end of the day. Bro, I went live on TikTok last night for over an hour. It has motivated me to start the damn YouTube. Do it, Gabe. It's fun. You just got to get there and get started. So before we get into some of this stuff, there's a couple of things on the agenda today. Number one, I want to talk about the PalantirBetter.com partnership. This is something that came out yesterday. Let's share my screen. I really didn't even get the chance to analyze it fully, but I'm doing it here. Amit, any long-term thoughts on holding TQQ? Jack, that's a great question. I am very skeptical right now of holding anything at these prices. So if you're buying TQQ at 37, I am really scared just based on the worry the economy is headed. Now, people may say that's bearish, maybe, but to me, I think a lot of the stuff that's happening right now is a little bit ill natural, if that's a word. I do think towards the end of the year, we might have a continue to rally, but I don't think 2033 is going to be that helpful. I don't think we've fully had the crash. I'm not saying there's going to be some crazy crash. I just feel a little skeptical buying at these prices. Now, if you're DCAing into it, that's fine. The problem with DCA with TQQQ is a triple leveraged ETF. So if you just started buying it, that is an issue because if it goes down, if QQQ goes down, 20%, you go down 60%. And so you can lose your money a lot quicker than just buying the regular QQQ index. So like the people that I know own that TQQQ have a sizable average at around 24, 25 because they've been loading up for a while. So I wouldn't buy it immediately. The conversation at Lowe's. Oh, Joel, bro, I saw your DM, bro. I got to respond to you. I saw your DM at like 12 a.m. last night. But yes, I know you told me about this. You were having some amazing conversation at Lowe's about stocks. That's absolutely amazing. So let's talk about, I don't even know what this partnership is. I'm going to read it to you guys right now. I'll probably do a video on this later. I literally have not even been able to read this, but all I know about Better.com is they fired some employees over Zoom and they got a lot of bad publicity for that. So Better, one of the fastest growing digital home ownership companies, having funded over $100 billion in home financing over the past 6 years since launch, announced today it is leading up with Palantir, a leading builder of operating systems. The partnership will initiate the launch of Tin Man Marketplace, the next evolution of Better's proprietary loan platform, which automates 70% of the mortgage process. It'll be powered by Palantir's Foundry. Okay. At launch, the marketplace will move the mortgage industry from an archaic rate sheets and 200 eligibility PDF files, which this is true. My parents just bought a house. It's kind of ridiculous. To a rich interface on top of Better's existing pricing matching engine. That's their proprietary stuff. That's where they get their value. This will make it easier for government-sponsored enterprises and mortgage industries. Okay. Among other use cases, the partnership will bring to market a tool that will empower government-sponsored enterprises and other government agencies involved in consumer loans to rebalance their portfolios. Sham Sankar, equitable access to home ownership is exactly the type of complex data-driven Palantir was helped to solve. We're excited Better has selected Palantir as the operating system to build its next generation of tools. Interesting. Okay, so Better.com seems to be this mortgage loan automated proprietary system to help people better pay their mortgages or have underwriting functions within the mortgage process, which is a long process. And they're using Palantir Foundry. Now, is this a big deal for Palantir? I don't think so in terms of like it changes everything. I think some of the stuff that Sham said on CNBC the other day about them being like the best healthcare startup is a little bit more important because Better.com, I mean, a lot of companies are doing what Better is doing. But it is interesting that they're choosing to use Foundry as the basis for how they're doing their operations, which is interesting. Chris says they're on their third round of layoffs. Yeah, Chris, I saw on Twitter you were spreading a lot of like, this is not even a good partnership with our fourth round of layoffs. Yeah, I mean, I don't think it's like the craziest news in the world, but it is cool that they're using Foundry and not someone else, right? That's as a bull, that's how I interpret a lot of this Palantir news. That okay, they're using Foundry. That's good. It's good that they're using Foundry. It's not bad that they're using Foundry, right? So that's a good thing. That's cool. I'm talking stocks with my 7, 5, and 2-year-old. It's so good to get it early, man. It is so good to get it early. I was thinking today when I saw the kid who made $100 million off of Bed Bath & Beyond, I wish when I was 18 in college, I was making a good $400 or $500 a month extra just from like side jobs. I wish I'd put it into the market. Like I started investing into the market when I was like 20. I should have been doing it when I was 18 because you have to fuck up for 2 years before like you learn anything. And so, and you know, I would have, if I had started in 2016, just buying Apple or something or Tesla, or like I would have made so much money just like compounding. But I started so late and I missed the big bull market in 2020. So it is what it is. But I think, you know, it's important to start early and that's relevant. There's a video on CNBC I want to talk about after the market opens. Where's my bell? Where's my bell? Did I leave my bell? Fuck, I left my bell. Damn it. I left my bell at the other place. Yeah, guys, I don't have my bell. I'm sorry. Damn, that's the premiere of this live, and I don't have my bell. I was going to talk about Apple charts. I want to do some Apple chart analysis and talk about if Apple is overvalued or not, because people are thinking Apple is just going to become a $3 trillion company again. And I'm like, I don't know, man. This is a little weird. So we want to watch a video on that. And also, I have to announce what I'm doing today. Should I announce it? Okay. I'm going to announce what I'm doing today after the stock market open. I'm going to announce what I'm doing today after the stock market open. I'm doing something pretty interesting today. Amit, aren't you under 25? You're already early. Yeah, I agree. I just feel like I could have been earlier, you know, like with the way my generation's going, there's no reason I shouldn't have, like in freshman year of college, I should have been knowing, like, I didn't even know what a share of a company was, right? Really. Like I should have known that. I figured it out 3 years later. And like, I feel like I should have known that. I should have like, there should have been other things I was doing instead of watching videos on random shit. I should have been watching about the stock market, but it is what it is. All right. The stock market is open. Imagine a bell ringing right now. Boom, 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 boom. I'm sorry. I forgot the bell at my office. I'll not forget it tomorrow, hopefully. I need to just buy 2 of those things. So I have one here and one at the office. Anyway, stock market is open. Let's see what we got. Tesla, 913. All right. Tesla's doing okay. Dogecoin rallying a little bit. 8 cents now. S&P 426. Snowflake 161. Their earnings are going to come out, I believe, in 5-6 days. Apple 173. We're going to talk about them today. Meta 174, down from 180 a couple of days ago. So it's down about 2% from there. Tesla 915. Netflix 242, down from highs of about 250 in the recent weeks. Oh, wow. ARK went from 52 to 47. ARK bought about 190,000 shares of Teladoc the other day. Teladoc. Oh, wow. Why is Teladoc down so much? Teladoc was at 41. Did they have earnings? I don't think they had earnings. That is not good for T-Doc. What about Coinbase? Coinbase 85. Okay, it's better than 52, which they were a while ago. That's not too bad. TQQQ, that should be down today. Yep, 37. That's down. Target had earnings. Let me pull those up. Their earnings weren't horrible, and the stock is actually decent. Let's look that up real quick. Target earnings, they're down about 1%, 173. Let me pull this up real quick. Okay, here we go. Let's stop sharing this and let's do this. Mick, can you simulate the bell with your body and voice? It's going to be hard. But Jay Schwat, what I'm about to do today on my second channel, when I announce it, you're probably going to like it. Okay, so Target earnings missed the mark after delivering lower than expected profit for the second quarter of 2022. That's up. They were at 149 at July 18th at 174. So not bad. Not a bad little uppity up since then. This is a CNBC article. I need the actual earnings. Here we go. Okay. So where are the numbers? Let's get the numbers. Here we go. Boom. 26 billion. Wow, look at this. They just met revenue and they got screwed on earnings for sure. But they just met revenue. 26.4 billion. So inventories. What is the inventory news? This is the important thing. Walmart said Tuesday it had seen a marked shift in consumer behavior. The company's told CNBC that 3/4 of its market share gains in food came from households with an annual income of 100. Target said it's not seeing as much inflation fuel change. Okay. Comparable sales, a key metric, blah, 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 blah. That fell short of just estimates, was anticipated a 2.8% rise. The resilience of the strong guest response positions as well, even if I can't predict every curveball that might come at us in the fall season. Fall and winter obviously tends to be a lot more better. The holiday season coming up for the big box retailers. Target's chief growth officer, Christina Hennington, said the retailer has spoken with customers to get a better sense of their mindset. What about the inventories? How bad are the inventories? It doesn't seem like it's horrible. Doesn't seem. Yeah, here we go. The turnabout forced the big box retailer to cut its profit outlook. Inventory was still high. Here we go. Though 15.32 billion at the end of the second quarter compared with 15.8. So they still are seeing consumer sentiment go down, which means as a big box retailer, they still have more inventory than they would like to have. But it's not as bad as it was the quarter where they dropped $40 in like 2 hours, which is unheard of for a company like Target. So nothing crazy. If only all students could raise 25 million. Yeah, that was the thing. The kid who made 130 million in BBY, Bed Bath & Beyond, he had 20 million to place in the beginning. So it's a great bet, 20 to 130. But it's like, not that many people have 20 million. Not that many people have 20 million. That's the hard part. You are early. I started investing at 26, 6 years ago. Yeah, I think if you're under 30 or even under 35 and you start learning about investing, you're probably early because most people just forget about it. They don't just learn about it too much often. I think it should happen as early as possible. That's the most important thing. As early as possible. Chris out here defending his Palantir bearishness by saying there can be multiple winners. Chris, we get it. Okay, we get it. Midwest, thank you for being here. Appreciate you being here. All right, let's go into a chart or a video I wanted to show on Apple that I think is incredibly important. Before I show that video, let me just share one tweet, everybody. I'm going to share one tweet, then I'm going to shut up about it. And you guys can do with the tweet whatever you want to do with the tweet, okay? Here we go. You guys ready? This is why I'm not going to be being able to have my live stream tonight with my Patreon members. This is what I'm doing today on my second channel. I tweeted yesterday, if this tweet gets 50 retweets, I will say the word startup 50,000 times live streamed on my YouTube channel, my second one starting tomorrow, 12 p.m. Eastern. It got 71 retweets. So on my second channel, that's what I will be doing today. 50,000 times. That's it. All right. We're going to watch a couple videos. First, we're going to watch Apple's new products this fall, and then we're going to watch the Apple chart video. The Apple chart video is more bearish. This video is probably a little bit more bullish. So let's go to this right now. And Apple is an interesting stock because Apple is 7.3% of the S&P. So it's very important to understand what's going on with Apple to understand a little bit more macro trends and behaviors.
How much of this is about, for you, not this announcement this fall? And by the way, what?
Hold on, let me change the system volume. The system volume is going through my mic. Okay, it'll work now.
What's your expectation? How much of this is about, for you, not this announcement this fall? And by the way, what's your expectation in terms of what you're going to see this fall, and if that's going to move the needle at all, before we even get to Apple cars and everything else?
I think this fall we're going to see the typical lineup, the iPhone 14, 3 new watches. It's pretty standard operating. I want to just highlight that the iPhone last quarter was up 3% year over year. That's off of a 50% comp. And so while I don't think the products are going to be particularly earth-shattering this fall, I do believe that we're going to see a factor of some nice growth just of the stability of it. But for me, it comes down to great stable business, and ultimately where this can go longer term, getting into new product categories. But to answer your question, this fall, Andrew, it's going to be pretty subdued, but enough to keep this train going.
And so, and when you say subdued, so it's on those products. You saw the news about there's an expectation there's going to be more advertising, for example, on Apple apps. Again, is that do anything for you?
It doesn't. It's I mean, this is kind of they've been toying around with advertising for a long time. The original was something. This is like a trivia question.
This is important to understand because, again, Apple's products, we don't know if they're going to be a hit or miss going forward because the products are getting a little bit saturated. But the ad business and like their ability to gut Facebook and take all of that juicy billions of dollars of ad revenue, that is incredibly exciting to know as an Apple investor and to see if they can figure that out.
Question at this point called iAd. It's worked great for Amazon. I don't see it being a measurable factor on Apple, but again, those are going to be probably get a lot of the headlines just because they're relatively new.
Right. Okay, so your gamble is the car then. Is that what we're talking about here? This is a big gamble on the car?
I think it is. I would look at it as a stable business. And ultimately, there's three pockets that they can get into. Any one of those three, I think, can measurably move the needle. If you're in Cupertino, you're thinking about two things. You have a $400 billion number for next year. How do you grow that? You grow it by getting into big markets. Health and wellness around the device. Apple Watch just added its second device to feature around AFib. That's important because clinicians can now use that data for more prognosis. That is a step in the right direction, what they can ultimately do in healthcare. AR, we're still a long ways away, but I think that we'll see some glasses, not as early as some think in January. I think it's probably mid next year. And to answer the substance of your question, do I think the car is what the bet is? It's not the bet. But if that does come to fruition, it would be significant. And just to quickly frame that in, is that the car market's a $2.5 trillion market. Smartphone market's a $1 trillion market. The car potentially could be bigger than the iPhone. And so if they've been trying for 7 years to get there, if they end up getting there, I think the stock quickly moves higher.
But you've seen those reports from The Information and others that say that they are just struggling. They have been struggling to get there. So I know we got these three doors behind door 1, door 2, and door 3, but something's got to be behind one of those three doors for your numbers to make sense.
Yes. I mean, for this ultimately to work, Apple does have to get into other product categories. And so, and I think there's probably the near-term piece of it, some of the hype and the around it. If they just reveal one of those doors, I suspect the stock will move higher. Then there's the long-term, what ultimately can it do? I do want to add one thing around behind those doors. There is one door that we can see a little bit through, that car door. Yes, they have been trying to get there for a car for a long time. It's been a little bit of a circus in terms of the leadership and where the product direction. But one thing that they will have is at the end of next year, an updated CarPlay. Now, this may not seem like much, but there are 13 major car makers that have already signed up to use this. Essentially, they're giving away the interior of the car. It's the whole control panel. This is an important step, not because Apple can make a lot of money, but I think they're essentially educating consumers, reinforcing the importance of Apple and the experience in the car, which I think lays the groundwork that even though it's been slow for Titan, ultimately I think that they, I don't want to say put a stake in the ground, they're going to get there, but I think it's a higher probability than most would expect.
So what's interesting here, let me share my Webull screen around Apple stock, is the car thing. They're looking for their next S-curve, right? And either that's services with like ad revenue, this has been a pretty brilliant plan by Tim Cook over the past couple of years to just destroy the social media companies and their tracking capabilities, leave Apple as the next best alternative that has ingrown tracking that just can't like that doesn't have to do kind of the shady stuff that social media does, but they can still get away with it and take all that ad revenue. By the way, Twitter at $44, while also potentially doing this car. Now, the actual physical car, I feel like it would be something that would be a Tim Cook legacy move if he gets it out the door before he retires. The problem is a car in Apple, it would not be a gas car. There's no way Apple wants to be associated with the gas industry, so it has to be electric. And then B, it's not going to be a dumb car. It's going to be a smart car. It's going to be AI driven self-driving, because Apple doesn't make shitty things. The next best thing is a Tesla, which is beyond, phenomenal as a car. So in that context, if they don't have FSD and they don't have a phenomenal electric car, they can make a beautiful design like an iPhone. But if it's not functional as a car, it's not really going to work, which means the licensing of their interior, which I don't think is that big of a deal I don't think that's like a next $100 billion S curve. I mean, yeah, you could do that, but it's like at the end of the day, I think like that's not that exciting at the end of the day. So it'll be interesting to see kind of how Apple reacts. Now, Apple's at 174 basically. It is $6 away from a $3 trillion company, which is why I believe it is a little bit, it's a little bit hard to buy Apple right now. I mean, if you buy Apple, you're buying literally at all-time highs. If you missed that out on 140, okay, sucks to suck. But if you're buying it right now, you're buying it at the highest it has ever been, outside of $6 from the highest it's ever been. And so there was a little bit of chart analysis that I wanted to show you guys with that talks about Apple. And again, why is Apple important? Because they are the market at the end of the day. Like if Apple goes up or down, it's almost like Tesla. Like if those companies go up or down, a lot of things happen. By the way, the weekly U.S. jobless claim dropped to 250,000. So not too bad on the actual jobless claim. Let me pull up this video on Apple's charts, and we're gonna talk about that. Here we go. All right, let's watch a little bit. We're gonna watch just the first 3 minutes of it. It's a pretty quick video, but it gives a decent level of analysis on the charts.
The first chart is a comparative chart, and it's just Apple versus the QQQ. It's peers, if you will, and it's a one-year comparative chart, and we know the spread is what it is. The numbers are Apple's up 16-17%, the Q's down 10.
Let me repeat that. Apple is up 17% on the year against the QQQ, the biggest weighted technology index in the market, and the QQQ is down 10%. There's a disconnect there. Why is one stock up 17, the entire index down 10? It leads you to feel, and by the way, this guy's warning is sell all of your Apple, so take with it what you will. But it feels a little weird, right? That's the kind of point I'm trying to get across here.
If we take this back a bit further, take a look at a 5-year chart. We have the same spread, meaning Apple outperforming the QQQ, of which is, of course, a big part. So there is some autocorrelation, but Apple's up 340%, Qs are up 130. Or the 10-year final comparative chart, we know that, again, Apple has more than doubled the other large 100 stocks in the NASDAQ 100 represented by the QQQ. So, but the here and now is what sort of gives me pause. Let's look at two charts. What we know from the absolute low of June 16th, Apple's up 35%. And the angle of the line is becoming increasingly unnatural. No givebacks, not even a down 2-day sequence. And so not only do we have that sort of unnatural line, we're up against a downtrend line, which is annotated quite clearly there on the screen.
So there's two things. There's a downtrend line that is annotating how the stock is moving. The stock hasn't gone down for 2 days in a row, and it's up 35% from the June lows. This is the part that I, as a relatively amateur investor at 24 years old, is trying to grapple my head around. The stock market bottomed 2 months ago, round about 2 months ago. And now we're getting to the point as if the stock market crash never even happened with the S&P and with Apple. I mean, Apple was at $3 trillion. It's $6 away from being a $3 trillion company. It doesn't feel natural. And I think, this is not me trying to be all Michael Burry, but it just feels like this is a bit weird. It doesn't feel like this is supposed to happen. One could argue that because now the bull side of this is inflation has gone down, CPI is getting a lot better, inventories are getting better. Eventually, we're already in a recession technically, so we'll get out of the recession, which means we've had our pseudo, downfall or crash, and that is a phenomenal argument for why things will just get better. The hard part here is trying to grapple with why in only 2 months Apple is about to be a $3 trillion company when 2 months when nothing has changed. Like, what have they done? They met earnings in the quarters. They haven't grown substantially. They're going to release iPhone 14s that, some people will buy, but it's not like the next biggest thing. So I think this is the interesting thing to understand. Everyone wants to predict a downtrend on Apple, but no one wants to stop buying iPhones. Yeah, but I think at some level, what does it become a $4 trillion company? Does it does it just keep going? You can't deny that I'm not getting the new iPhone 14 because the 12 Max Pro, which I've had for a year and a half now, has been phenomenal. And there's a lot of people like me. Yes, people are going to buy AirPods. I get it. I'm just saying it's important to think about this when you think about Apple's overall growth. It's just hard for me to see it continuously going up as much as it is.
It also is otherwise known as a megaphone. Forget about what that kind of talk is. It's a move to a difficult level. And if you pull this back and we do one more chart, it's just putting this in the context of going back to a pre-pandemic wipeout. And so, again, there'll be people who say, no, you stick with momentum, you ride it until it starts to show you reasons not to. My thinking is that to some extent, this is almost the face of fear. People are hiding or wanting to be in this particular stock, maybe at the exclusion of all others. For instance, of the stocks in the QQQ, there were only 10 up today, but Apple leading the way yet again. Just a little too popular, a little too happy, a little too good.
Could fear, Carter, in this market context that we're in, keep that unnatural line unnatural?
Well, I mean, certainly you can get, as the expression goes, overbought or oversold and stay that way for great periods of time. But if one were to use oscillators, I don't particularly, but you could look at a MACD or an RSI, you could look at a Bollinger Band, or one can just look at where this is in relation to where it's been. A move like this is hard to sustain much longer. And at a minimum, if one's long, you take a little off, or you write some calls. Or if you have the dexterity, you try some options to do something rather than just blindly stay long.
Right. Carter, thank you. Carter Braxton Worth.
Sure.
And we have to...
So that's one thing I wanted to bring to the attention. I see some of the comments here. Sam says, people were questioning valuation of Microsoft, like there's no more room for growth at 500 billion. We're at 2 trillion now, and I see the same things over and over again. Yeah, I mean, I see that I think that was 2016 they were at 500 billion, and they've had a phenomenal 6 years to get their growth. It's not that these companies are going to stop growing. To me, this is more macro. This is not even a question of Apple. This is a question of the macroeconomics. Are we in the right situation for us to have the massive rally that we're having? Inflation is still at 8.5%. I don't think we can't forget. Now, if that keeps going down and the Fed gets a lot less hawkish, then yeah, I think we're going to rally. But I don't know. I think it's just not as natural of a rally. For anyone who says this rally is natural or it's deserved or it's no big issue, when it's been the smallest bear market we've ever had in relevant history, then I don't know. I would disagree on how natural that is. That would be my thesis. But if Apple can keep growing, then they're going to be fine. If inflation actually gets down to below 5% this year, then it's going to be good. But when you've got meme stocks going crazy, when you've got Bed Bath & Beyond stuff happening, it means I feel like there is a little bit liquidity in the market that is messing up a lot of stuff. SoFi, by the way, down pretty bad. It was trading at finally 840, 850, now back to 677. SoFi is one of those positions I have been wanting to get in, even if it's just a couple $1,000. Have not pulled the trigger yet on SoFi. I still don't fully understand them. I might, the SoFi thing is you might just buy them because they're just so crushed and when the next bull market comes, they're going to rise up. But I tried to be a bit more mature with my investing now and actually understand what I'm buying. When I'm buying SoFi, I still don't get what I'm buying. I know people say they're the AWS of fintech. I don't know what that means. The student loan stuff, I know people say as soon as, Biden doesn't stop extending student loans, they're going to make money. I'm like, I don't really know why I don't know why loans are that. I just don't know that much. I'm ignorant to SoFi, even though I know there's a cult following around SoFi, maybe even more than Palantir, to be honest. So that's a little bit of the issues that I have when it comes. SoFi is worth $10. It's dumped so hard by SoftBank. Nothing fundamental. SoftBank is selling SoFi. Interesting. Okay. I think I saw this somewhere, but I didn't fully confirm that. All right. Apple is 75 on the daily RSI. I would bet my life as a pullback happens now. Yeah, and that's what the guy was saying for the relative strength index. That might happen. That might actually happen. Nubank, that is a great point, Michael. Nubank in Latin America had phenomenal earnings. These guys are a public company, right? I'm almost 100% sure they're public. Yes? What's the ticker symbol for Nubank? They're mainly Latin America. Yeah, they are because Puru owns this shit. I know this guy. He owns it. It's NU. That's the equity holding. NU. Okay. Is it NU? I might be wrong on this. NU. No, it is. Okay. So the stock is down, but the growth is pretty good. Market cap is what? They have 4 billion outstanding shares. That's a lot of shares. What's the market cap? Free float 22 billion. Wow, it's a $4 stock and the market cap is 22 billion. That's a bit insane. I'm not gonna lie, but they are growing at a pretty phenomenal rate from what I saw in a bit of their earnings. One of the problems with Palantir is that they don't have a Cook or Andy Jassy. Yeah, but they have a carp. Know what I mean? They have a carp. So I guess we'll see what happens. Chris getting a lot of Chris will be on the podcast tomorrow, Palantir, so we're going to be able to talk about everything that's going on. And Chris doesn't care about the hate. He's able to brush it off. He's fine. Tesla literally stated 100x growth on battery day, but everybody just asleep on that. Well, Tesla at 911. Man, if Apple goes down, I'm not sure Tesla's going to stay up with it. But Tesla's growth feels a little bit more natural than Apple because Tesla actually has the potential to massively grow. Where Apple, it's a little bit skeptical. I don't know. I guess we got to see. We really got to see and see how this stuff happens. See how it plays out at the end of the day. S&P 426. So staying relatively flat on the day. Any other stocks that are really peaking? Roku, where's Roku at? Roku's at 77, down from 85. Spotify was at 120 last time I checked. Oh, Spotify's at 113. Okay, so they're down a bit. What was another one? Oh, DNA. Let's go. DNA was up. They are down 3.2. They were up about 30%, so they are down a little bit, but not too much as well. Chris is just baiting the hate. Yeah, Chris loves it. Chris loves it. All right, so let's go to another channel or another video on YouTube. This stuff is, again, a lot of this stuff is just going to be very interesting to see how it plays out as the September rally comes about. All right, let's look at this one. U.S. inflation will likely sharply drop over the coming months. And if this is the case, then we should be seeing more of a rally.
You set the stage because those UK numbers that we got earlier this week, now the EU numbers, tell us that there's a pretty raging picture of inflation. I know energy is a big part of that, but how do you see this shaping up just around the globe? Is this still a global problem?
Well, it is a global problem, but it's much worse in Europe and in the UK because of the impact on gas flows from Russia, which has driven up energy prices much more than they have in the US. But there's broad-based core inflation as well in Europe and in the UK. It's not just an energy problem. It's not just a food price problem. But there's no question that those things are making it much worse. And they're likely to be a problem for a good bit longer yet. That's really the big difference between Europe and the US. Because in the US, I'm quite happy to argue now that inflation is coming down, both headline and core, and the next few months are likely to see it drop really pretty sharply. But I can't say the same for the UK and for the Eurozone. Some of this is already baked in because of the lag between rising wholesale gas, natural gas prices and retail energy prices. And some of it is more persistent pressure as well. So they're really dealing with what's likely to be a much more deep-seated and longer-lasting inflation problem than in the US. And of course, that's a drag on growth because it's squeezing real incomes and it's putting pressure on the ECB. And the consequence of all of this pressure is that the euro has been very weak, and sterling has also been very weak against the dollar in the last few months.
Rick, what do you think about the inflation numbers we've been getting here in the United States? What's your expectation for what's to come?
You know, it's so difficult to try to keep up with all the minutiae, all the fundamental economic releases that go into inflation measuring. But I like to monitor the markets because, of course, inflation is playing a key role not only in the interest rate side, but the yield curves, the relationship between different maturities. And I think it's pretty obvious over the last couple of months by how interest rates have moved, how they've affected stocks, that we are past peak inflation. And I think the data does bear that out. And I think there's some logic here as well. Definitely energy policy or lack thereof of good energy policy domestically and globally has contributed more than its fair share of the inflation issues we're discussing. But there's also lots of leftovers from supply issues, COVID issues, war issues, and all of that, of course, is playing havoc. And I agree with Ian. And to dig down more deeply on the relationship in Europe between wholesale and retail, we know what's going to happen in the UK. That's why Bailey's already pre-announced a recession. They have caps that are going to start to come off. So we know they're not actually seeing the true nature of energy prices. And look at stories about coal. Coal is king. Coal is having a banner year, whether it's Germany or many of these countries. And to think that Putin isn't paying attention to all of these issues as Germany advertises cutting back 20% so they can stockpile enough to heat homes in the winter, believe me, he is going to do most likely what's the most painful. We need to prepare for the worst. And with regard to how this is affecting all the global trade issues, well, Ian knows as well as anybody, it's a relative value trade. Europe in recession, UK in recession isn't going to help the U.S., although the capital flows will favor the U.S.
So, Steve, that gets us to the Fed and how they interpret all of this, how they handle it, because, again, inflation numbers look a lot better here. But when you're looking around the globe and trying to figure out what happens next with things like energy commodity prices, it's a lot to assess. Should we feel like we're in the clear, or are they really on heightened alert here?
Definitely not in the clear. And I think one big issue it's really hard to game out is the effect come the winter on natural gas prices in the U.S. If Europe has a big shortfall. There's going to be a huge demand for whatever we can send over there, and obviously some limitations on the infrastructure of whatever LNG we can send. You can imagine that could pressure our natural gas prices, which could give us another wave of energy inflation that's worth gaming out. There's a couple of things here on the Fed.
So one of the key points is, and we're going to wrap up the stream, guys, in a second, the energy prices that are going to be happening as natural gas gets a little bit more stalled in Europe going into the winter when we need heat. That's going to be an interesting thing to understand for gas prices. Gas prices have started to go down in New Jersey. I'm seeing it down at about $3.99 at most gas stations. So OPEC has been pumping out more gas. Biden has been doing a decent job at least getting gas prices to go down. Now we're going to see how that plays out over the long term. In the chat, I know there's a lot of fighting going on between Samuel and Gabe. First of all, you guys can all be best friends. You guys are friends of the channel. RSIs, technicals, all this stuff. Everyone can use whatever they want to do to understand things about options. So everything will be okay. Joel says stocks still taking a shit by the time I can buy next week and we probably moon again. Yeah, we're going to see what happens if it is time to do that or not time to do that. Chris says, my goal is to see Tom Nash sell Palantir. That will be interesting. I don't know if he would do it. I know he has made a video saying that is on it is on his shit list, and we will ultimately see if he ends up selling it. But we're going to see what happens. Owen, thank you for the super chat. $10. Use this to buy one singular Palantir share. Owen, if I have to send you back this $10, for those who don't know, he's like 17 years old or 18 or whatever. You didn't have to send $10, man, but thank you for sending it. I appreciate you guys. All right. Thank you guys for the live stream. It was awesome stuff. We are coming out to the end of these 40 minutes. Last thing I will say for today, I am going to be live streaming myself on my second channel called Amit is Building that I'm sharing right here. And I'm going to be saying the word startup 50,000 times. Let me say that again. I will be saying the word startup 50,000 times in a row. And I will be tracking it on my second startup. If you guys want to know what my startup is, and if you guys would like to appreciate some of the torture I'm going through, it's in the description. I would really appreciate you signing up. Let me know your thoughts. We've had some really awesome growth over the past couple of weeks. I would love to know what you guys think. It's going to be a rough day for me. Let me just say that. It's going to be a long day. I don't know how long this is going to take. I said I would do it, so I'm doing it 50,000 times. Amit is Building. That's my new channel. Or that's my second channel, my startup vlog channel. So if you guys want to see me today, that's where I will be. How are you counting the words? There is an app on my phone. I will be tapping the app. And once that app taps up to 50,000 times, I mean, I'll just show you right now. It's a counter. So here's the app right here. I'm going to keep pressing this 50,000 times. And so we're going to see that live. All right. Thank you, everybody, for joining. A couple more videos on Palantir coming out today. I appreciate you all. I will see you on the second channel if you tune in, or if not, I'll see you tomorrow on another morning live stream. Bye-bye, everybody.